When it comes to market structure, it can get confusing because you watch a YouTube video and it shows you something like this and it looks very simple on textbook on a video, but when you go to the actual charts, you are confused by the different trend direction. Price going up, then down, then up, then down, up, down, up, down, up, down, and it's just going in circles, and you are sitting there confused on whether price is actually in an uptrend or downtrend. And that is when I'm going to give you a secret. The secret is a run on a higher time frame is a trend on a lower time frame. So what does that mean? If you look at this right here, it's an uptrend. Price is creating your higher highs and higher lows, higher highs and higher lows. And every time price push up, that's a run. And retrace, that's also a run. And then push up again, run, 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 run. So this whole thing constitutes a trend. So that is what I mean when I say that a run on a higher time frame constitute of a trend on a lower time frame. So within all these runs, you will see your mini trends, right? You will see price creating higher highs, higher lows in the smaller time frame, the lower time frames, and then it starts pulling back and actually reverse to becoming a downtrend on the, once again, the lower time frame, and then reverse and head back up, creating your uptrend again, and then creating your downtrend again. So in this case, you can see on the higher time frame, price is actually making a very nice uptrend, right? Higher highs, higher lows, higher highs and higher lows. But if you go down to the smaller time frame, like the lower time frame, you will actually see price creating these mini trends, right? Price is creating this mini uptrend, mini downtrend, mini uptrend, mini downtrend. So that is what I mean when I say that this overall run consists of a trend on a lower time frame. Same thing right here. This run consists of a trend on the lower time frame. So a run on a higher time frame is a trend on a lower time frame. That is the key. Remember that. Because to be honest, once I really understood this, that is where I just like opened my eyes to really the way the market move. Like I'm able to be in sync with the market right now. So if you still don't understand, let me explain it and simplify it even further. Now let's look at the higher time frame structure first. So price is going up and then it starts pulling back. And then price is going up again, creating your break of structure, right? Price break the last high, creating your break of structure somewhere right around here. So now price has created a new high and a new higher low. So higher highs, and then price starts pulling back again, creating another higher low, and then eventually it goes on until price eventually loses steam, right? Remember, nothing goes up forever. Whatever goes up must come down. So eventually price will lose steam, and then what happens is price will go down, break past the last higher low, creating what I call the market shift. So the market shift is the first sign that this overall trend is about to end, and right now the trend is going to reverse to becoming a downtrend. So once a market shift is present, price broke through the last higher low, we are expecting price to pull back to create a lower high to confirm to us that price is in bearish order flow right now and price is about to collapse to becoming a downtrend. And that is exactly what price did, right? Price created a lower high right here, and you can see this high is lower than this high right here. So this pretty much just confirmed to us that this overall uptrend right here is over, right? It's game over. Now it's downtrend, so we should be looking to shorts, and then you can start seeing price go down even further and then pulling back again, and then go down even further, creating your lower highs and lower lows, right? Simple, basic market structure. And this is what price looks like maybe on the higher time frame, on the 4-hour or the daily time frame, right? Very smooth, very easy to read. But once you do a top-down analysis, things start to get a little bit more confusing. Once you start going down to the 4-hour time frame, and then there's the 1-hour time frame, and then there's the 15-minute time frame, things start to get a little bit confusing. So now let's go down to the lower time frame. So the lower time frame structure is this gray color line that you see behind the big black bow lines. Okay, first of all, when you look at the lower time frame structure, always remember what I said when I say that a run on a higher time frame is a trend on a lower time frame. So this is a run, which means within this run itself, there's gonna be a mini uptrend, right? Price creating your higher highs and higher lows. And then eventually when it starts pulling back, right? When price starts pulling back, it's gonna pull it back first on the lower time frame. So you'll start to see price breaking structure on the lower time frame first. So you'll probably see some sort of market shift happen right here, right? You can see a market shift happen right here where price broke through the last last higher low. So this pretty much tells us that this run right here is about to retrace, because this bullish uptrend on the lower time frame has just been broken, and right now price is about to retrace because price has given us a market shift. So we are expecting a pullback right here. And then when do we know the pullback is going to end? When do we know this overall pullback is going to end? When there is another market shift. That means price has to break the last lower high. So right here, price starts creating your lower highs and lower lows, and then this is the last lower high right here, right? And then price starts shooting up, breaking past the lower high. Once again, indicate to us this retracement is done, right? So we should be looking for this continuation right here. Price is going to continue to become an uptrend, and that is exactly what price did. And then the same thing happens again. Once price start pulling back, guess what? We are waiting for market shift once again to take price all the way up, and so on and so forth, right? You can see these things don't change. This is essentially how price moves, right? It creates the same patterns on a higher time frame, on a lower time frame, and that is why I say the market is fractal, because whatever market structure that happens on the higher time frame happens on the lower time frames as well, and what happens on the higher time frame must first happen on the lower time frame. And now if you really understand this, it becomes much more easier to trade. So the next time price breaks structure and starts creating another higher high, you can wait for price to pull back, and then that is when you can look for your buy position at these pullbacks right here. But how do you know when to buy? When the lower time frame trend, this bearish retracement, ends. When it ends, when you get the market shift, that is when you know the trend is about to continue, and that is where you can get in for a buy position, right? And then same thing right here. Eventually the trend reverse, and first things first, it reversed on the lower time frame, right? So I want to point your attention to right here where the trend is reversing. You can see the higher time frame structure, it only starts creating the market shift right here. But if you actually go to the lower time frame structure, right, you actually go down to like the 1 hour time frame, you will see that it already gives you this market shift somewhere right around here, right? Somewhere right around here, you already know for a fact that this overall entire uptrend is about to end, right? It's about to end. So this is where you could have easily got in for a sell position right here at this market shift. Ideally, when price retrace, create this low high right here, enter for a sell there and take it all the way down. And this is how you catch these insane reversal trade setups. Now, so this higher time frame structure that you see right here, this could be on the daily time frame. So what does it actually looks like on the weekly time frame? On the weekly time frame, it could look something just like this. This huge up move, and then this huge pullback right here. And before price actually creates another up move. So on like the weekly time frame or something, this could just be a complete retracement. So this wasn't really a downtrend, but in reality it's just a retracement of the overall higher, super duper higher time frame trend. So now that we are actually on the charts, let's apply whatever we have learned so far. So right now you can see that price was in an uptrend, right? Because this is on a higher time frame, and you can see the 4-hour trend is very bullish. Price is creating your higher highs and higher lows, right? Higher highs and higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, and higher lows, right? Very, very clear. Everything is good so far. It's a good day to look at the charts. But then, like I said, if you go down to the smaller time frame, you will start seeing this as something will look something like this. Like you will just like start declining very, very much, and then you look at this again and then start seeing price creating this downtrend, and they start thinking that this is actually a downtrend. Like I said, when in doubt, just zoom out, right? Just zoom out to the higher time frame, and everything will just makes so much more sense for you. So eventually price starts going over here and then starts consolidating, losing steam, and then eventually it creates our market shift somewhere right around here. This was the last higher low, right? This is the last higher low, and then price breaks through the last higher low, creating your market shift. Now the moment price breaks through the last higher low, creating your market shift, we are waiting for price to create the lower high, which it did right here, right? It created a lower high right here. This high is lower than this high right here, which pretty much confirmed to us that price is about to go down. Now if you look at this, maybe you can go down to the smaller time frame, and you can start to see that, okay, that is actually bearish order flow, right? There's a lot of selling momentum, selling pressure right here. But before this actually came in, there was actually this big bull candlestick right here, this big bullish candlestick right here, right? So this was the last sign that showed us that there was still some sort of bias at this zone right here. But after that, price just started collapsing. You can see price starts collapsing, break through this last higher low with such a huge amount of selling pressure and selling momentum. You pretty much know that price is about to go down right here. So from this onwards, we are looking for sell position, right? We are looking for sell position. So we wait for price to pull back, and then we can potentially look for our sell position somewhere right around here. And that is when you can see price just starts going down, right? Easy as that, right? This is somewhat like an order block. So if you don't really understand order block, there's another video on that. I'm not gonna dive deep into it. And that was how I managed to like predict this move right here, right? Basically all these order blocks where price actually retest it and then go down even further. Yeah, so I'm not gonna dive too deep into entry, but you can see this is what the lower time frame structure looks like, right? Price starts pulling back once again, and then before going back down even further, and then pull back again and go down even further, creating your lower highs and lower lows in a downtrend, right? Basically a downtrend. When you identify your multi-time frame market structure, you need to know exactly where to enter for the trade so that you can get this high risk to reward ratio trades. And the truth is, you want to enter when price is cheap if you're entering for a buy. And then if you're entering for a sell, you want to sell at the highest point, right? Buy low, sell high, clear as day. So ideally in this uptrend right here that we have, we want to enter in the lowest point, right? It could be here, right here, or it could even be right here, right? Ideally my entry will be right here. Let me explain why step by step to get you to my sniper entry strategy, whatever you like to call this. All right, so first of all, let's start off with the higher time frames, right? The higher time frames, the 4-hour time frame, right? So we see that price has been creating your push phase, right? Price push up and then it starts retracing, and then it push up again, breaking past the last higher low that we have right here. Now once price broke past the last higher low right here, it created this low right here, right? This pretty much validate to us that this is the last higher low. So this is the last higher high, and then this is the last higher low, and now price is creating your new higher high, right? And right here price starts going up and then pull back a little bit before go up even further. So I wouldn't really consider this one as a valid pullback, right? Because price did not really create like this valid strong low, right? So this could just be a very weak pullback, like a mini pullback before price goes up. Right, once price goes up, right, it created this higher high when price starts retracing massively. All right, so here we have our 4-hour high, and then we have our 4-hour low. So these are the 2 points that we need to take note of, right? These are the strong points that price will have a very strong supply or demand. So the minute price actually broke through the last higher low, right here, your next step is to wait for price to pull back, right? Because you cannot be entering right here, right here, right here, or right here. If you do, your stop loss must be all the way down here, right? You want to get the best entry, right? And chances are you have already missed this up move. Then in that scenario, you can potentially wait for price to pull back. So the minute price starts pulling back, how do we know that price is going to enter a pullback phase? When price actually break through the last higher low. Now if you look towards the left, where's the last higher low? The last higher low is right here, right? This is not a very strong low, right? This is the last higher low of this like push phase. So the minute price actually goes down, break past the last fractal higher low, we know for a fact, creating our market shift, that is when we know that price is about to retrace. Price is about to enter the pullback phase, which means we shouldn't be buying anymore, right? Like I said over here, yes, you can enter for a buy right here still, but your stop loss must be all the way down here, and that is not what I will personally do, right? That is when right now price is in a pullback phase. The minute price starts entering the pullback phase, we are in this downtrend, and we don't know exactly when this downtrend will end. That is when we should not enter for a buy anywhere here. So right here, that is where bearish order flow takes place, and it starts creating your lower highs and lower lows and lower highs and lower lows, right? Like pulling back, like I said, right? Where is it gonna pull back? It's gonna pull back to a place where price is cheap. Remember, if you think about how smart money trade, right? They are not gonna be buying up here. They want to buy at a discounted price. Like I said, buy low, sell high. So they're gonna buy somewhere down here within this bullish order flow area, near this previous last higher low, where there's going to be a lot of demand at around this area right here. Because remember, if you look at the higher time frame, price is going to create a higher low right here before pushing up even further. So we are expecting price to retrace all the way down to somewhere right around here, right? Somewhere right around here, you'll probably find like some sort of demand zone right here, or some sort of order block area right here for you to actually enter for the trade. Let me just quickly recap again. So over here, this is the 15-minute time frame trend, right? This is the 15-minute time frame trend, and right now price has turned bearish to facilitate this pullback. So right here, price is going to retrace to a discounted price. What I like to do is to actually have my premium and discount tool right here. You can see this is where price is the premium. That means that price is expensive, and this is when price is in a discount below this 50% level right here. And most likely price is going to retrace to the discounted price, and I draw it by marking the swing high to the swing low right here. So price is gonna retrace to an AUL, a strong point of interest within this discounted zone. Like I said, it could be at a demand zone within this discount AUL, or some sort of order block AUL right here, right? We don't know, that is why we play by ear. So let's just assume that there was a demand zone somewhere right around here, and price has managed to get down to this point of interest, right? Get down to this strong demand zone right here. So the minute price gets down to this demand zone, we can look to enter for a buy, but we never ever want to assume that price is gonna mitigate this demand zone, because chances are price could go down even further to touch this 4-hour swing low to grab liquidity before fueling this up move, this continuation move. So we never ever want to assume that price is done retracing. That is why we want to play by ear to wait for our market shift. We want to wait for this pullback phase to end, to switch to bullish, from this bearish order flow to bullish order flow. And that is when price starts to react at this demand zone. We are still patiently waiting to see what price does, whether price actually break through the last lower high right here, creating your market shift, which signify to us that this downtrend, or rather this retracement, is going to end and price is going to continue to go up right now. Or the second option is that price is potentially going to create more lower highs and lower lows until price eventually get down to this 4-hour swing low. So those are the two options, and in this case we got the first option, where price actually mitigate this demand zone and then come up here, break through the last lower high right here. Right, there was a lot of demand right here, a lot of buyers, a lot of buying momentum and pressure breaking through the last high right here, now giving us our market shift. So the moment this happens, we know for a fact that, you know what, this entire retracement is about to end, and that is when we are looking for our opportunity. We are looking for our opportunity to enter for the trade. And ideally, you can easily enter for a buy somewhere right around here already. By all means, go ahead. But what I want to do is to get the best of best entry, the tightest stop loss, right? So that I can minimize my risk and maximize my reward, my profit potential. So in that case, I will go down to the lower time frame, right? Like this could come in the form of either the 5-minute time frame or the 1-minute time frame. And if you look at this, after price break through the last high, right, creating this bullish move, it pretty much confirmed to us that right now the lower time frame trend, the 15-minute order flow, which used to be bearish, now it has turned bullish. And now 15-minute is bullish, higher time frame trend is also bullish, and now we get this like alignment of the lower time frame structure and the higher time frame structure, giving us additional confluence that price is about to take off and it's gonna go up right now. So in that case, I'm gonna be waiting for this swing move right here to actually start pulling back, because like I said, after price created this market shift, it will pull back. It has to pull back to create that higher low before price goes up even further. So where is it going to pull back? Once again, premium and discount, right? Pull back that premium discount right here, and price going to come and pull back to somewhere within this discounted zone. And ideally, there is probably an order block that created this market shift right here, right? And that is when I will wait for price to pull back to that order block right there, and that is where I will look for my entry. So once again, I go down to the 5-minute time frame. You can see this is the, once again, another small little pullback right here before price mitigate this order block right here, break through the last lower high. Once again, the smallest bearish order flow to facilitate that market shift, and then right now switch bullish right here, right? Pretty much switch bullish right here, and that is where I'll potentially enter somewhere right around here and take profit all the way up at this swing high on the 4-hour time frame and place my stop loss below this last higher low. And this is how you catch those like insane risk to reward ratio trade setups, right? Because now the 5-minute time frame, the lower time frame is bullish, the 15-minute time frame is bullish, the 4-hour time frame is bullish. All the time frames are aligned towards the same order flow, which is all bullish, which pretty much give us the confirmation that we need to enter for a buy position. So that is essentially how you can trade this type of continuation, right? Once you get all the time frames all aligned to bullish, right, that is when you can enter for a buy, and you can start seeing price will go up here, tap into this supply, starts retracing, goes up again, creating your higher highs, higher lows, tap into this supply again, and then starts creating higher highs and higher lows, and eventually it's gonna come up here and break past this next 4-hour high to create what? Your higher high on the 4-hour time frame. And then eventually it will start pulling back again after price break the last high, and this whole cycle will repeat over and over again. This is how the market moves. Remember, the markets are fractal. Now let's apply this market structure strategy onto the charts itself. So right now we are on the higher time frame, we are on the 4-hour time frame, and we see that price is in an uptrend, right? Clear as day, uptrend. Price is creating your higher highs, higher lows, higher highs and higher lows. And just to make things even more clear, what you can do is to mark up the highs, and this is your bullish break of structure where price broke through the last higher low, the last higher high, and then create a new higher high. And then same thing right here, your break of structure right here. And right now this is the last high before price starts pulling back massively to create your new higher low. So right now price has just broken past the last high, creating your break of structure. And right now we are able to identify our 4-hour swing low, right? If you look at this, clear as day, this will be your 4-hour swing low. So we can put this as our 4-hour low, right? Our 4-hour swing low. Now, where is our 4-hour swing high? We don't know yet because price haven't started pulling back. Once price starts pulling back, and that could confirm to us that this will be the 4-hour swing high. So we still wait and see, and you can see price starts going up even further, go up even further, and then eventually starts pulling back. You can see the minute price starts pulling back, we could confirm to us that this is our 4-hour swing high right here, right? Remember, this is when the opportunity starts to arise, right? Chances are, like I said, if price is all the way up here, we don't want to be entering for a buy. We want to wait for the pullback to happen, right? And that is what price is giving us right now. So the 4-hour overall order flow is an uptrend, it's bullish, and we want to enter for a buy. And right now, price has started retracing. How do we know that? We go down to the smaller time frame, right? We go down to the 1-hour time frame, and you can see if you go down to the 1-hour time frame, where is the last higher low, right? This could be the last higher low. You can see price starts creating higher highs, higher lows, and then starts creating another higher high before price actually starts creating this higher low. And somewhere right around here, there was the market shift, right? Because price failed to create another higher high. So over here, clear as day, this is what I will constitute as our market shift right here. So the minute price actually created this market shift right here, pretty much confirmed to us that price has turned bearish in order to facilitate this pullback on the 4-hour time frame, right? So right here, yes, you can enter for some sell position here and there and take advantage of this pullback until price eventually reach to somewhere like a discounted area, right? So yes, you can look for your sell position right here, but I wouldn't necessarily do that. I mean, it's up to you honestly, but you can start seeing price starts pulling back. Let's go down to the higher time frame actually. Yeah, we can see price starts pulling back, massive pullback, and in this area, like I said, we want to wait for price to actually pull back to a discounted area. So what you can do is to draw your premium and discount right here, and you can see once you draw a premium and discount, price is gonna retrace to the discounted price, which is below this 50% level right here. And then I will expect price to actually retrace to either this order block right here or this extreme order block right here. Right, these are the two strong demand zones that I could potentially look out for, right? My strong demand zones that I could potentially look out for to see when price gonna react to it. And you can see price right now just created this strong reaction at this order block right here, and it's also within this discounted zone. So we could potentially look for our entry somewhere right around here, where price is actually switched to bullish order flow, right? The lower time frame. Remember, the lower time frame structure has to switch to bullish as well before we actually enter for the trade. Going on the 15-minute time frame, you see that price has mitigated this demand zone that we have right here, and right now price is at a discounted price. So chances are there could be a lot of buyers within this area right here pushing the price up. Now, where is the last lower high within this overall retracement right here? This overall retracement, you can start to see price starts pulling back, waiting lower high, lower low, lower high, and this will be the last lower high right here. So when price break through the last lower high, what does this give us? This gives us your market shift, right? So price has the market shift, and right now we could potentially be waiting for price to pull back somewhere right around here, create this new higher low somewhere right around here before taking off, and that is where you can potentially look for your trade setup, right? So we're still waiting very patiently, right? And you can start to see price starts pulling back, right? So once price starts pulling back to create this higher low, this could potentially be a point of interest for us to actually enter the trade, right? Let's see how price react to this, right? You can see price starts going down even further. Okay, it tapped into this demand zone once again, so let's see whether this demand zone will hold. Okay, you can see, as you can see, like I said just now, right, there's a no 100% chance that price will retest to this demand zone right here. Like I said, it could even go down even further to all the way down here before price actually reacted and actually starts reversing and hit back up, right? We never ever know which zone it is, so we are still playing by ear. And you can start to see, okay, price seems to be respecting this one right here, and you can see bullish order flow start to take place. Price created your market shift somewhere right around here where price actually break through the last lower high right here, and that is when price actually starts pulling back, right? Price pull back, create this higher low, and that is when we could potentially look for our entry somewhere right around here, right? Somewhere right around here, this could be our entry, and maybe we could enter like somewhere right around here when price actually mitigated this, creating this higher low right here. And right now the 15-minute time frame is bullish, right? I personally like to enter the trade on the 15-minute time frame, right? For some of you who want to enter on the 5-minute time frame, by all means go ahead, but I like to enter on the 15-minute time frame because I'm more of a intraday and swing trader. And then this is when you can place your take profit all the way up at this 4-hour swing high right here, right? And you can see right here, and I'll say the best entry will be somewhere right around here. Let's see whether price actually reacts to this, right? Reacts to this zone and starts going up. Okay, price is looking good so far, and you can see once price starts doing this, right, you can see market shift happen, and this bearish order flow, this pullback right here has pretty much ended, right? And this is when we know that price is back to bullish. The 15-minute time frame is bullish, the 1-hour time frame is bullish, and right now it's aligned with the overall trend, this overall uptrend, and that is where we got this like very nice entry right there. And you can see price starts spiking up, goes up even further and further, and yeah, eventually it's gonna go up there and smash our take profit. As simple as that, right? This is a very simple strategy. Like I said, if you understand how market structure, how it really all works, then that's all you need in order to trade profitably. And if you actually look closer at this 4-hour order block that we have right here, or rather this demand zone, price actually created a liquidity sweep somewhere right around here, right? Where price actually broke past the low right here, sweep the liquidity before creating your equal lows right here and just hit all the way up. Now that is liquidity concepts, which is a little bit more advanced stuff, which I'm talking about in another video. So just to sum up this entire strategy, we are looking at this multi-time frame structure, right? We are not just focusing on just one time frame. We are looking at this overall different time frames using our top-down analysis approach, and we are waiting for all types of time frame, the structure to align to either bullish or bearish. And remember, whatever happens on the higher time frame must happen on the lower time frame first.